Welcome to our June Adelaide Property Market quarterly update. You're here with Marissa from Rise High and
Lachlan Turner from Turner Real Estate.
And as we do every quarter, we're bringing you the quarterly property market update for Adelaide. And today we're focusing on the June quarter, but given that we're a little bit beyond that, we'll talk a bit about what's happened flowing into July as well. So, Lockie, what are you seeing happening in the June quarter and more recently, what's happening in the Adelaide property market?
Yeah, well, what's happening right now is, I think, which is happening right across Australia, is that there is a little bit of a softening in the market. Yep. But I must say, and it's proven with facts and all the data, is that Adelaide is outperforming virtually every single capital city. In fact, for July, the growth in Adelaide was 0.4%. The only state that did a little bit better was Darwin at 0.5%. And 5 out of the 8 cities across Australia actually recorded negative growth. We wouldn't call it growth, but it was in the red. So Adelaide's still doing very well. Because we are at Opens, I do all the auctions for Turner and so on. I can say for sure that there are, in overall, less people attending open inspections. Auctions are still selling. They're not necessarily selling on the auction days and not prior, but normally a little bit afterwards. And that's just an indication where buyers are just currently sitting in the market right now trying to work out where it's going to land. And so the action that they were taking is not as decisive as what it used to be.
Yes.
The only other I'll say quickly is the price point is probably the most interest at the moment, most activity, and sales are just flying out the door between that 400,000 to 700,000 band, which is very much the first home buyer market. That would by far and away be the most active market at the moment.
Yeah, it's really interesting that you say that, because we looked at the stats and about 90% of owner-occupied purchases, 20% of owner-occupied purchases at the moment are for first home buyers, which is pretty high. So that would sort of reflect what you're saying in that 400 to 700 band. So do you think, given that it sounds like from what you're saying that demand and supply is starting to become
even up a bit,
whereas obviously previously we had really strong demand, really low supply, and that was obviously driving the incredible 20+% price growth that we had in the last 12 months. What do you think is going to happen with the Adelaide market moving forward in terms of where do you think we're going to land? Do you think we're going to, how much longer do you think we've got this growth potential in Adelaide, and do you see it sort of stabilising at that point, or do you see it softening? Do you have any thoughts around that?
Look, I just think that people, when they read the media, they've got to be really careful about which article they're reading and who writes it.
That's right.
Also, what we've found after being in the industry for many years is that the commentary always reflects Eastern Seaboard. So this morning I read a headline. Property market is going to go down the most it ever has since the GFC in 2008 by 10 to 15%. But it's pretty much aligned to the Melbourne and the Sydney markets. Adelaide is a very consistent market. In fact, it's got an average historical growth of around the 3% mark. And in fact, what's going on now right around the country is a couple of cities that are dropping the most in value are indeed Sydney and Melbourne. Adelaide is still in the positive. So that is probably a pretty good example. I think the national average for growth almost sat at 30%, so it was 28.6%. And I think Adelaide's going to hold that value. And I don't think we're going to see much growth though. I think the values that have gone into the market will stay in the market, particularly in Adelaide. They might go down a bit in Sydney and Melbourne, but Adelaide will probably hold around that mark and maybe get growth of 1%, 2%. But the party's over in terms of people acting decisively, throwing their hands up and bidding at auction, but there's still very, very good interest, and for homeowners that value's still there. But I love the fact that it's evened up a bit. I love the fact that buyers are now like, oh, beautiful, like the ball's sort of in my court a bit more now, and that's as evidenced by first home buyer market at that price point. So I think it'll even up.
Yeah, and I think that is what you've just described is representative of how Adelaide has performed previously as well, because Sydney and Melbourne, they do have their big booms, but they also have their busts, whereas Adelaide is the slow and steady, and we normally just grow, stabilise. It's a different type of market. So we're expecting the same. We're expecting that we'll reach a new normal, which will include the price rises that we've had, and that's going to be a new sort of base level for house values moving forward. So we're certainly feeling really positive about the Adelaide market moving forward. Rental yields are still really strong as well in Adelaide. I think rental yields in Adelaide are leading the Australian market. I think about 3.7% was what I thought was around the average. Would that be about right?
Yeah, well, I think it's a bit above that.
Oh, is it?
I think most of the rental yields have gone up on average by about $40 per week, which is about a 10% rise on average. If you look at the average rent of about $400 a week. So that's the reason why investors still love the Adelaide market, is because relative to the national market, we're still actually one of the most affordable housing median house price ranges in the national market, and yet the yields are very high in comparison to that. So it is good for investors. Also in July, our company at Turner added 32 new houses onto the rent roll business that we have. So that's Fantastic. 32 new investors in July in this market. So there's also a lot of investors that are selling, that have held properties for probably a decade or more and just want out after some good growth. But we're filling the pipe back up, and particularly with some younger type of investors as well. So the appetite there for investing is still strong. Rent yields are very good too. And
are you seeing interest from interstate investors into the Adelaide market?
Yeah, we always have, and particularly from the buyer agents we work with, like they work quite heavily and advise their clients to buy into the Adelaide market, and the people that did that 3 to 4 to 5 years ago served their clients very well. But again, Adelaide's just a stable market. Yeah,
absolutely. And obviously, big elephant in the room is that interest rates are going up quite rapidly at the moment.
Across the world.
So right across the world, So that's happening, and of course we always knew it was going to, because it was at historical lows. We knew that it wasn't going to be able to stay at that level. Have you seen that the rising interest rates have had any impact on buyer activity or the way that buyers are interacting with you as an agent? Have you seen that sort of had any impact at this point? What are you seeing out there?
Yeah, well, I think it's a better time for buyers finally, and we are definitely seeing it in the coalface. Slightly less numbers through, but it depends on the price point of the property. As I said, that 4 to 7 range is probably our strongest market right now. And then at sort of the higher range from there and around that million mark, and there's a lot of properties that are around that mark now, probably the numbers through a little bit less. And particularly when we auction properties, people are more guarded. I've had some of the biggest auctions I've ever done in 18 years during the growth phase, and now, one on Saturday, Evandale, 3 registered bidders but no bidding. And then we had one at Glenside, 4 registered bidders, 2 bid, and then we had to negotiate with the highest bidder because the bidding didn't quite reach the reserve price out in the open. So that's probably 2 really good examples of how buyers are just a bit more
reserved, holding back a little bit,
seeing where it's going to fall.
And do you think that has something to do with the interest rate, or do you think that's just a natural?
Oh, there's no question it's interest rates. There's no doubt about it, because inflation's crazy all around the world, 8%, and so it's happening in the US, UK, Australia, and most other countries. So it's very high. So we have to rein that back. So there will be another interest rate rise, and there'll be another one, and there'll be another one. And so that makes money a little bit dearer. So everyone sort of starts to tighten the belt.
But I guess to put some perspective to that, we still have really low interest rates right now, even after those rate rises.
You said, Marissa, that the normal rate is anywhere between 4 and 6%.
6 and 8%.
6 and 8
is normal.
Wow.
Yeah. So I think we're still way below that. So that's for a retail rate that the banks are sort of lending to their customers. So we're expecting that rates will go. Now resi rates are sitting around, starting to head up, in 4s in front of them now, instead of historically we've seen like 1s and 2s, which was nice. But now, we will get back to a point where interest rates will be 6% plus, and that's sort of more of a normal level. So I guess, it's just a matter of making sure that all buyers have done their numbers to make sure that they can afford it when those rates go up. And like you said, we haven't seen that it's really stopped people from wanting to do what they wanted to do.
No, there's still plenty of action out there, and as I said, it's falling to the buyers now, and they're a bit happier. So it's all good, and the vendors should be happy too, because they've still got that growth that has occurred in the market, particularly in Adelaide. So I think it's a better market for everybody now. So
my final question for you, Lockie, is what advice do you have to give to people wanting to sell or people wanting to buy in today's market?
Well, I think, should we start with selling? I think the seller needs to be aware of like the macro market. Macro is global, and it's not the seasons, it's not the day, it's not whether the Crows are playing on Saturday and whether people are going to come through my open. It's more what are interest rates doing. They're clearly on the way up, which is clearly going to affect the interest from buyers. So if you're wanting to sell and keep and ensure that value that the market has increased by, sooner rather than later would probably be the way to go. And it's probably ideal if you're selling now and then the market potentially softens further. That's smart. That's just trying to pick the top and the bottom and then buy at better value. Well, what was the other question?
Advice for buyers.
Yeah, buyers. Well, equally, there's more opportunities now, so I'd put the foot to the floor. I'd be out at opens a lot more. Make sure you register with agencies like Turner, so turnerrealestate.com.au. You can go in and register as a buyer. It's a complimentary service, and most of the good, bigger agencies do that. And we actually launch all of our properties on turnerrealestate.com.au first, and then they get matched to all our registered buyers. And sometimes they don't even go on the major portals. So I have said that before in other market updates, but that is a big one. Look at the major portals, register with the big agencies as well, and I'd be getting excited if I was a buyer. It's the environment is easier for you. Yep,
absolutely. Well, that is our update for the June quarter this year. We'll be back with you again for the next quarterly update. Thank you for tuning in. As always, if you've got any questions or anything you want to talk about, the team at Rise High or the team at Turner Real Estate are here and available to help and support you with your property goals. So thanks for tuning in. We will see you again next time. Thanks, Lachie.
Thank you, Marissa.
See you later. Bye.